Boomers, Gen Xers, and millennials rarely agree, but there are 7 stocks they all think you should own now. According to data from Apex Clearing provided to Investors Business Daily, Apple, Amazon, and Microsoft are top holdings of all of these generations of investors. To find this information out, Apex analyzed nearly 8 million investor accounts held by baby boomers, Generation X, Generation Z, and millennial investors as of the end of March. So, let's take a look. According to Investors Business Daily, more than half of these stocks are outperforming 90% of all others based on both stock gains and earnings growth. Even during the depths of the crash, many individual investors didn't panic. Instead, they looked for opportunities, and I hope all of my subscribers and viewers did the same. The popular belief in the media is that when we hit a major correction, individual investors freak out. But this time the data show the opposite happened. All generations bet heavily on Apple, Microsoft, and Amazon, the only 3 S&P 500 companies to regain their trillion-dollar valuation levels. And betting on these S&P 500 companies was a good move. According to Apex, the data show that millennial investors were the most aggressive. These investors, born from 1981 to 1996, opened 314% more brokerage accounts in March than in a typical month in 2019. But older investors piled in too. Accounts opened by baby boomers jumped 263% in March, while Gen Xers opened 306% more accounts during March. Watching individual investors rush into the market amid a bear market is surprising. Pro traders like to think that the masses are dumb money, who scurry out of stocks at the slightest whiff of trouble, but the opposite was true in March. And as this chart shows, these are the top holdings for all 3 generations. But not only are the big tech stocks moving, the vast amount of stimulus is starting to lift all boats. The overall strength has pushed the market to another milestone. More than half of the S&P 500's members are trading above their 50-day moving average for the first time since late February. The S&P 500 is having an astonishing run, with stocks posting one of the fastest recoveries on record. Perhaps a response to improving coronavirus trends, but to many, it's a continued reaction to the unprecedented fiscal and monetary measures that are helping boost equities higher, even with deteriorating economic data. The Federal Reserve and Congress have announced a bundle of measures to shore up the U.S. economy. On Monday, for instance, the central bank expanded its municipal debt program to cover smaller cities and counties. More is likely as Congress starts to work on the next phase of funding. The Fed's balance sheet has already ballooned to a record $6.5 trillion as the central bank continues its purchases. According to Bloomberg Economics, it's possible that the funding could reach as much as $12 trillion and top 50% of gross domestic product by the end of the year. Although this is catching the hearts and minds of investors, it needs to catch the muscles of the economy to make sure that this market rally is justified. In the meantime, we continue to monitor. And for today, that's ChewDog Charts. Thank you.